Mbulelo, thanks so much for your time. I'm interested because you guys are calling this a world's first. How so? Thanks, Fifi, for having us. So we think we've looked and researched quite a lot around these events. So we cover innocent investors who lose the value of their capital due to events around management fraud and dishonesty. So classic examples are your Steiners, your resilience. And as an insurance product, we went almost a year's of research. So we started researching the product on the 1st of January last year. And we worked quite closely with Hannover Re, which is a global reinsurance company, consulting with their actuaries and various stakeholders within their business. And the product actually ended up being approved for sale in South Africa by the German board of Hannover Re. And 1st of January, let me jump in there. So 1st of January last year, is that not, when did we learn about Steinhoff? Was that December 2017? Yes, yes. So this product predated Steinhoff. It predated Steinhoff, but then what was the inspiration behind it? So it's an interesting story. One of my fellow co-founders, Shane, attended an event hosted by Hannover Re, and at that event, Michael Jordan was presenting around chatbots and how AI and machine learning, etc., would improve the way people invest because they can go through so much information and they can remain impartial, etc. And Shane kind of realized that the one risk you have in this is what if that data that you're using to make the decision is wrong? So that's the key risk here, but it doesn't just apply to machines, people as well. Before we invest, we look into companies, we look at the financials, we look at the information around that company, but a lot of that actually comes from the people within the company, and there is a risk that that information proves to be false, and that's really what inspired the product. All right, so you've partnered with Easy Equities on this. Tell me about that relationship. So Easy Equities is one of the fastest growing platforms in South Africa. They're also a low-cost carrier, and they are on a mission really to get more and more South Africans investing. So for us, it made a lot of sense because you're getting a lot of young people in there, first-time investors, who may actually have this fear and have concentrated portfolios. And so our product was a great fit for that platform because we give them a sense of protection against this sort of very, very difficult to assess risk. At what cost? So the product, one of the key things for us was to actually make sure that we don't erode investor returns. So the product costs 0.56%, and that gives you a year's cover. So if you're investing... Of what? So of the share value that you're covering. So if your share costs 100 Rand, then the insurance will cost you 56 cents for 1 year's cover, and you can invest. You can cover your shares when you invest as well as cover existing shares on the platform. I mean, I understand the value of this product for trading purposes. I mean, for people who are looking to make money in the short term and are, you know, quite hurt by moves like a Steinhoff that can plunge 80% in, was it a day or so? But what about long haul? Because don't we pay these fund managers to do exactly that, to manage our risks in the best way? So what's the long-term attraction here? So a couple of points there. So one, if you think about Steiner Resilience, even fund managers were on the wrong side of these sort of events. So it's very difficult to assess risk because it's people inside that business actually who are closer to that business doing these things and you're not aware. I think the second thing is we really looked at it as when you're an investor, you kind of believe that people are doing the right thing, and ethics and trust are a big thing in investing. And when a company breaches that trust and those sort of ethical values that you hold them to, you generally, if that's important to you, you'd want to get out of that investment. But we're giving you a way to get out of it and minimize the loss that you have. Okay, so you're protecting investors against managers that perhaps do the wrong thing and, you know, cost shareholder value. What doesn't this cover? So it's specific to management fraud and dishonesty, so things like accounting fraud, people who break the law, who break regulation, who make dishonest statements to investors. What we don't cover is your general business risk, so things like operational risk, things like... hacking in the case of Liberty? Yes, so if there's no accusation against management that they were dishonest in some way,
then the product doesn't respond to that. So in the case of Liberty, it's still really early, but we haven't seen anything that says that management were aware that there was a gap in their risk management and they didn't do anything about it, for instance. But that's the sort of thing that the product responds to.
Sure. And I mean, you're partnering with Easy Equities now. What's the plan for the future? What kind of partnerships are you looking to broker there?
So we're partnering with Easy Equities, and it's a great place for us to start, but this is a product that's applicable on any trading platform within South Africa, and as a global first product, we're also looking to go international with the product.
So there isn't a product like this in the rest of the world?
No, not in insurance space. So the most similar thing we found is a put option, but put options are quite complicated. Our product is really simple to understand, and it's much, much cheaper than the put option. So there's nothing in the insurance space using insurance capital that does this now.